biggest threat to a business entity or to a business person in the world and everywhere else, it's tax. There is no country in the world that can let you undertake a business without formalizing or without being able to follow or without being able to have a proper channel of sorting out or of being that is well conversant with the matters tax and being able to comply. You must first for you to undertake a business, you will hear countries like the United States of America, China and Russia and whatever, they are having issues with what we call tariffs. In other countries, they don't deal with tax as per se, because they accommodate this tax in one, and they will be able to impose something called a tariff on that business, a sales tax on a business, a turnover tax. And for a case in example, in the African parts, most of countries, they do what we call a value added tax. We break these tax down and be able to take the main concern of what we want to dive in today is you have a business, you're doing business, and for this case you have issued something called, that is an electronic tax management system invoice to your client, to your customer, to an institution. You have first, you received a local purchase order that was dated, that is on let's say 1st of January. Then you undertake the business by 10th January, you're done with the business, and you issue what we call a delivery note. Once you've delivered a delivery note, the next document that will be required is an invoice. An invoice, for this case in Kenya, you are undertaking an invoice that is with your company logo, that is integrated, or it speaks the same language with your delivery note. Then as you raise this invoice, for the case in example is a business of 2.5 million, so the delivery note lists the items that you have delivered. And then you come to an invoice, it now gives the prices of the items, the goods, the service that you've delivered on that institution or in that business or in that organization. Then once you're done, the invoice you've given that is complementing the delivery note needs an electronic tax management system invoice, that is ETIMS. That ETIMS, as you raise it on the 10th of January, it will be tax that is related to the month of January. So when you come to the month of February, that is before February 20th, you are supposed to file this tax of 2.5 million as a gross amount. By mistake, that firm, as at 20th February, they have not paid you, and you have already entered that invoice in your tax system. That means as you go to Kenya Revenue Authority platform to be able to generate what we call an auto-populated VAT return. So the big question of business people is, I'm supposed to pay this tax here, but look, I've not been paid, and I raised this invoice. And KRA, once you file on the 20th, by 5th of that subsequent month, you're supposed to have paid. So this is the right way. In a business, if you are running a serious business that is focused on business and value addition and growth, you run something called a liability account. A liability account, this is an account that saves money that does not belong to your business. As you receive an LPO, as you receive an order, as you receive a call of a business, and you know very well that this business, as I undertake it, it is a value added tax, one, and then this person will require an ETIMS receipt, and this person might delay to pay. So the best thing you do, as you receive this order form of 2.5 million, I will advise, and this is the right way, you budget the cost of getting this product inclusive of tax. And as you budget to purchase these items for sale, you will be given an ETIMS receipt also from the person who will sell you those items. So that means at that point you will get an input VAT. from this person. As he gives you an input VAT, you will proceed now to the next level of calculating the difference. That look, the input VAT is already generated at your business PIN. So the amount payable will be the input VAT, will be the output VAT minus the input VAT that you have received. The difference is the amount of money that you budget. That look, this is the cost of getting this item, this is the input, this is the tax. You add the three, you get the cost of doing that business. So that as the month ends and you file your tax, you know that as you calculate the dates, people who are your debtors, people who are supposed to pay you, Kenya Revenue Authority was part of the procuring was part of the procuring process. So there is nothing for you to worry when it comes to undertaking that Kenya Revenue Authority payment. So you will be able to sort it out without stress and without maybe doing any other thing. You will forget that at the cost of production of these items, most business people, they never calculate tax as part of the liability that has been incurred to be able to come up and complete this business. And then most businesses do not utilize or are not well conversant with what we call a tax input and the VAT system, how it works, how it has been categorized, and the intentions of this value added tax. The intentions of this value added tax is to protect the consumer to be able to consume products that are certified by Kenya Revenue Authority. And then it is to be able to protect your business by the government of the Republic of Kenya and to be able to sustain our government. So it is something that is two-way traffic, and it will help you because when someone comes up with something called electronic tax invoice management system that is integrated and it works as an ERP system, there are people who don't keep records. But because you have an electronic tax invoice management system, you can be able to go back to that tax management invoice system and be able to see what are the purchases that I received during this month and what are the sales in a very easy way, and you don't pay for it. You are being given an opportunity, a platform to be able to monitor your business in the right way. So I want to encourage you that the best practice to undertake in a business, one, is to ensure you are a tax compliant citizen, because running a business without being tax compliant is the first process, is the first procedure, and is the first intention of you failing as a business person. So ensure you are tax compliant, you're doing the right thing, and you're following the right channels of doing this business. Because one time you might do business that is illegal, receive 20 million, then got up with the right people who have discovered that is illegal, then be fined 30 million. In that capacity, as you are getting 20, you are excited, but in the capacity of paying 30, you will have to hustle. So it does not make sense to be able to be on the correct path and then at the end of the day end up maybe getting things that do not make sense. That look, we can do this thing, but we can do it in the right way, and how. This is the procedure. Don't fear to be able to issue an electronic tax management system. Just issue it. So let's do business and let's ensure we are tax compliant, because that is the secret to excellence. As you budget your business, before you calculate your profit, know that tax is a liability in your business. Once you understand that, you will not have problems and challenges of meeting the tax burden, and I think we will be able to move. If you've not subscribed, subscribe to our channel. Let's grow together, let's be informed, and let's engage each other.